All right. Good morning, everybody. Let me know in the comments if you can hear me clearly, but good morning. Welcome. We got Alan here with us today for our typical Thursday live stream, or Thursday morning in the United States anyway. It's late in the evening for Alan. So thanks, Alan, for staying up, being with us today. How are you doing?
Yeah, very good, Brandon. Very good. And good evening, everybody from Dalian.
So as usual, before we get rolling, Alan and I are not licensed financial advisors. We're simply sharing our opinions, things that we're looking at in the markets, and how we think about the markets. So please don't take this as financial advice. And if you were to blindly take any trades based on anything you hear us talking about today, without doing your own research, you're going to end up losing all of your money and living in a van by the river. Now, as I've just been highlighting before I go live here, we do have a CTT public Discord. It's open to everybody. CTT will remain what I call open source. So it's free to the public to use. I've also committed to, probably will be next year before I do it, maybe even in the bear market, but I'm going to do a series of videos about my exact crypto trading strategy, exactly my setups and how I trade, and getting with the videos on getting you started on Gemini, specifically that platform, just to get people started. So be looking forward to that. But yeah, feel free to join us in the Discord, public Discord, if you would like. And with that, I'm going to Alan and I, what we're going to talk about today is a little bit of models. Alan's got a few models he wants to look at, Bitcoin models, and we're going to talk about what value that those models might have. And we might talk about the specific models, maybe looking at some of the pros and cons of them. But really what I want to focus on is how I use models, and how I think if you're going to use a model, how you can use it beneficially, and how it can become a detriment to you. But just to highlight, this is my model, right? And my model is really nothing more than a chart with a uptrend on a log chart that shows me that, hey, we're still strongly trending upward on like Bitcoin specifically here. And I've got, of course, mapped out key dates in Bitcoin's history, Mt. Gox going live, the halvings, and I've got a crying child in the background. Sorry if y'all hear that. But I've got this metronome effect that we have around the cycles from the lows to the highs. There's been a metronome effect. I've got that measured out. But as you can see, I clearly don't have any specifics. I've got a potential, based on some data, we might have a peak around this time, and then what that would look like if we hit the top of that channel. But that's not a prediction. That's just a heat check indicator. So I'm gonna stop my sharing there. But this is if you want to ask me about what my model is before we get rolling, I don't really have a model. My model is simply just looking at the charts, and I check this chart is my main chart to make sure that my heat check, make sure that we're still trending upward on a log chart. And if we were to lose this channel, then that might tell me that maybe things have changed. So Alan, again, good morning. And so we'll turn it over to Alan to get his thoughts. I know he had something he wanted to share here too.
Absolutely. Well, we'll start as we usually do. Let's just check the technology is going to behave itself as usual.
There you go.
So hopefully you can see that clearly, Brandon.
Yep, looks good.
Excellent. So obviously we did a pretty good job last week of another top signal, just to keep the series rolling.
Were we the top?
we got a nice weekly close up where we wanted it last week, sort of, and then got above the former all-time high, and then obviously we've just reversed straight off that to come back and retest. And obviously, as we're talking now, we're back in the 58s. The bears are trying to push this thing down. But for me, I mean, this is a retest again. What we really need to see is this established as support. This area, I used to have this as this red area of resistance when we were down here. We actually got through it in a couple of weeks, and we've been retesting it. So from what I see, we're just retesting now. Now, could it come down, test 55? Yes, it could. I think for me, worst case, you can see where we've got weekly market structure support is down here, 51. I'm not sure it comes this far, but this is Bitcoin. This is not a big reverse if it does for Bitcoin. It's what are we talking to come down there? I don't think it's that much. Like when we're talking 25%, but
Yeah, that's the level like a lot of people are looking at, the 51K level. That's kind of my worst case too. And you have the 120-day SMA that's right below it at 50,800, I believe, is coming in at pretty soon. And the
we're on the
21-week
daily.
EMA, a lot of traders watch the 21-week EMA, and it's right there. It's 51,700 roughly, the 21-week EMA. So you've got the 120-day SMA, the 21-week EMA, and that's kind of like worst case downside. I've been sharing a lot of charts. I'll just share my quick take on that. This feels like a reaccumulation more than a distribution pattern. Now, again, I've been kind of keying in on all the obvious manipulation going on in the market, so I'm just trying to keep my eye on that. A distribution pattern, it's a lot more pops to the upside, and it creates a lot more kind of FOMO, people buying as they think it's going to break out. A reaccumulation pattern is a little bit different pattern where it looks like more sell side, and it spends more of its time toward the bottom of a range than the top of a range. And what we're seeing is we're actually seeing increased volume as we increase the bottom of the ranges. It means people are buying at the bottom of these ranges. So we see increased volume. We see liquidity has been basically completely wiped out. And another, like our fear and greed indicator, has gone to more or less neutral. So this, to me, feels like an accumulation pattern. If it were to be an accumulation pattern, the next move actually won't be an all-time high breakout. It'll be a breakout to the midpoint of the sell-off, probably right around 62, 63. And then it'll be another leg down, probably, any of those targets you talked about are good targets. So I'm not saying that it's going to go up to 62, 63 and then down to 57. This is a potential pattern that we can see unfold, and that would be pretty synonymous with a accumulation pattern. So yeah, if we see it break up and not get up to 67 or so, but you see it like it roll over at 62, 63, and then it comes back down and tests once more the 57 region. And even if it breaks down all the way down, the worst case, I think it would be about 52,000, 51.7. If you get all the way down there, it can still bounce out of there and be an accumulation. Now, if you break that level you've got, in my opinion, that would lead us to believe that this was a distribution pattern and we're probably heading even lower. But then we're heading for an accumulation if it were to break down further than that. But what I'm looking at right here is basically, for me, the 50-day SMA and the 50-day EMA are both right in line, right about here where we're at right now. My expectation is we get a little move back up toward the 20-day SMA, which we can show that later. But those are my estimations. I'll show my charts later. But yeah, so what you're showing,
the 120 on there, obviously on the daily, which I think is what your sort of baseline.
Yeah, that's my main one, right? Yeah, we stay above that. I'm still bullish. We can pull back to that, and I have no real significant concern. It's only if we break that and then test that as resistance, and or if it curls downward, right? If it starts to trend downward, but it's trending upward. So I'm macro bullish on Bitcoin. So that's my thought.
Yeah, it's interesting. I mean, I obviously followed your trading method for quite a while now. It's pretty straightforward looking at the 120 MA daily, just to keep your head around where we are, and obviously is it up or down. So it's good advice. I mean, I don't see anything too scary right now, but obviously this has rejected. It's now coming down again. It could easily go lower. We'll see. I mean, the bulls are getting a bit of a test, to see what happens. Obviously worth a look at Ethereum, because I think, to me, the catalyst for this sell-off was actually Ethereum. And actually, I didn't have this chart set sort of correctly last week when we talked, but we've got quite a significant trend line here from the old high through the high we made in May, and we rejected off it, as you would expect. I mean, having come in and tested it, then we push right back up into it and then have rejected pretty hard. It's obviously we haven't, when you think where we came back last time, we've tested this trend line again. Obviously that created the trend line, but we've come off here. We haven't come off very far at the moment, but it was, if you look at the charts, Ethereum came off this resistance, and it may have been we've got a lot of sell pressure suddenly there. There was a trend line here which I've taken off, but it broke down. A lot of people have shared on Twitter. So maybe one of the catalysts for this was this Ethereum rejection for this, and yeah, we're still seeing this downwards pressure here. Obviously, this was a big resistance, but I've got this weekly 39.50, this area. I've seen other people on Twitter talking about this. So this looks like a potential place. Again, we could come back a bit further and retest that. We go to the weekly, it looks a little clearer. You can see again, that's just a market structure there, the last one. We've just all these green candles just coming back for a retest. Again, if we can establish this, because it's pretty much the same level as the old weekly all-time high here, we can establish this as support and resume back up, get a nice bounce. It might give the momentum to clear this trend line finally. So for me, just keeping it simple like that at the moment, looking at this, and we're seeing the ratio 0.07 is holding in all of this chaos at the moment. We haven't really seen any sort of major change, which is interesting. Yeah, you know, previously we have seen some, when we've had these corrections, we've seen quite a lot of bleeding. So far in this one, it's pretty neutral. So whether that's saying particularly anything, but that's what I'm seeing. Obviously, nothing's changed in the terms of looking at this zoomed out. This pattern, you know, I put both the trend lines on here from the weekly. From, so we can start this line here, later one where we then broke out. So still looks healthy to me. Nothing's really changed there.
Yeah. It's really just continued consolidation. I know people are getting, we had the two all-time highs in Bitcoin, and then technically ETH made this all-time high too, and that created a lot of, but at this moment in time, it's really just, I think, you know, in crypto, people get spoiled and expect a breakout to move, you know, 8,000% or something. And that's like with these bigger, more mature assets, this is just normal. Like you make a high and you come back and you retest and build some support, and then make another high. And I mean, if you look at this S&P 500 or the NASDAQ, it's just, you know, all-time high, and then you have a couple weeks of down and consolidation, and new all-time high, and a couple weeks, and it's exactly what bigger asset classes do.
I mean, this is obviously, we're seeing some downwards pressure at the moment. So things are getting tested here. We've got 3% off on ETH, but it's 3%. I mean, I just zoom out. I think ETH's still 4,150. It's
yeah, it's still up a whole heck of a lot from when we started.
$90 not so long ago. It's 4,150, and this everybody's a bit bearish. Okay, we wait and see. Just a few other, just also we quickly look at the charts. Obviously, we have seen dollar strength, so we looked at it quickly last week. But obviously, I've seen do it on the daily. Obviously, we had this sort of rising sort of wedge here into this long time resistance, and finally we've popped up out of there. Now it's not got, obviously there's some more resistance over here now, so we will see whether the dollar's playing that much of a significant, whether it's influencing Bitcoin and Ethereum's price. I don't know. It's
yeah, if the DXY. The DXY, I used to use it more as a proxy of risk on versus risk off. But the problem is we have this just kind of shift. If everybody's, you know, having to print so much money, that it's really just a matter of, you know, which currency is in the least bad shape.
Yeah, it's which one's really weak.
Yeah, exactly. So the dollar is probably, the dollar in compared to hard assets is definitely still weak and growing weaker, but it's growing slightly stronger versus the other more pathetic fiat.
Mostly euro, pound, and Japanese yen in there. Yeah, I mean, the Eurozone's not great. The UK looks pretty horrible economically, and then Japan's obviously been sideways forever. So it's sort of, yeah. So
I like
the US just needs to grow a bit, and this could be getting back up here. It's the state of the world. So. So this is a good sort of weird like that, but see, we've looked at this so many times. I mean, up.
Yeah.
I mean,
like everything's melting up.
Melting up, and we get a bit of a correction like we were looking at not so long ago, and up. It's just, yeah. Print more money, up. So, you know, you would expect this to come back more at some point, wouldn't you? But it doesn't look like it wants to do much at the moment.
I have a channel on my charts. I showed it my last live stream. I guess it was an impromptu one Monday. My opinion is that because we had you can see kind of an ascending wedge pattern that had formed on the S&P 500.
Yeah, we've
And
had a few of them, haven't we? But it's just we've sort of broke out of all these lines, and then we've just come back to the next support and just carried on up. It's just
so
been crazy.
if you look at that pattern of it forms an ascending wedge, it seems to break to the downside and then it bounces. So what you do is you form a channel around that. My opinion is that that false breakdown of that ascending wedge back to the bottom of what would be really just a channel, because of that relative strength, my opinion is that the odds of it breaking to the upside of the channel are higher than it breaking to the downside of the channel currently, and by quite a bit, which would mean that while this is a very strong up move, and it could, if you zoom out, I mean, you can make it look like kind of a parabolic move. It might have a lot more upside and really a big parabolic breakout to the upside of this channel at some point. That would be kind of scary though, because that means that things are really starting to break down. Obviously, if you have, we don't have that much strength in the real economy. It's just that the currency is collapsing. But if we were to break to the upside of that channel on NASDAQ and S&P 500, that's a really good indicator that our currency that this is denominated in is breaking down more than these things are just getting that strong.
Taking over, and that has to be consequence to all the money printing. And it just, you see here, I mean, this was obviously when it all went bust, and then we kicked in the printer, and then up we've come pretty quickly. Then we've had an even bigger crisis, and we've kicked the printer in even harder, and just you can see the angles gone from this to this.
And so I have a bunch of comments here about having Michael. I'm going to be out of town next week, guys, just so y'all know. So no live streams next week. I'm sorry, but maybe the week after that, maybe we can have Michael on Tuesday and then Alan on Thursday or something.
Sure.
So if you guys would like Michael on, comment. Let me know. So go ahead, Alan.
So this is obviously a bit of a look at the charts. Dominance, Bitcoin dominance going nowhere. East dominance is just, again, it's up against this resistance on the chart. I mean, I'm on the monthly here. If you come to the weekly, it looks a little clearer what's going on there. So still sort of putting its head on the resistance there, but it does decide to clear. What have we had? 1, 2, 3, 4, 5. It's usually time to something to happen. So we will see. Not feeling bearish, I have to say, even though we are seeing this continued sell pressure at the moment.
I think
some of these tokens, if you look at things like DOT, I mean, it's got a bit hammered in this relatively, but this has gone up spectacularly, so it's come down again.
Volatility is starting to return. That's kind of what I'm sensing. That's the thing to think about, is this is kind of volatility kind of returning to the market. The other part of it is, again, in a kind of a, when you look at the psychological aspect of this and that reaccumulation, it's gonna feel like there's a lot of downside pressure. That's what you're gonna, that's the kind of almost the emotional feeling you're gonna have about it. But one thing I want to point out, there's a Heath level at, I believe it's 58,439. That was the daily close on October 27th. After we had a sell-off late October, and then the bounce October 28th. That was that close of that day. And then, that right there. And that goes back all the way to the February peak. That's almost the exact price of the February peaks. That's where we found support in October, was that February top price of right on 58,400. We haven't touched that cleanly yet. So what I think is actually going on is we're bouncing just above it. We're going to tap that and then get our little bit of a bounce here.
But this is like as well, which we've talked about before, which is, I can't see my
the monthly
chart with the monthly on, but we're actually testing the monthly support here. Again, exactly. Quite now giving it a big old test. And again, if we can hold that starts to look.
The monthly is right. It's a little bit above where we're at right now, huh?
Yeah, we're just giving it a good test right now, sort of at it. So
I think this all this is a lot. This produces a lot more fear in people that have expect. Speaking of models, I guess we can get into that at some point. But like
Yeah.
for me, this isn't creating any anxiety for me, right? Because I'm like, this is normal. Okay, we had a false. This is confirmation that the pattern of potential manipulation, or this is a maturing asset, however you want to look at it. A breakout, all-time high, coming back to a test support, breakout, test support. But it doesn't create any fear or panic in me. Like this is not a concern for me at all. This is normal behavior for a mature market, and this is good consolidation.
Yeah,
But it's
it
people that
is.
have. Go ahead.
I was gonna say, if you look at Ethereum here, I mean, we could be just early part of the month here. We've come in and we've had this big candle, so we're tracing back to pretty much the peak of the month before.
Yeah,
We get a resumption up, it would just look normal. It's not.
Yeah, exactly. And so, but obviously we have to mind our downside. So we want to know where we're wrong. But at this point, this is to me a normal retrace back to support and testing support. The telling thing will be if we don't get a bounce here and we just sell off, then something's really off. I would imagine we'll get a little bit of a bounce. It's just a matter of how much we bounced into right at 61,000 and kind of got rejected by that, overnight the last day or so. But at some point, we should get after the sell-off concludes, we'll get a bounce. The bounce will be telling to tell us what's going on as well. But yeah, to me, this is not like super concerning price action. But, again, people that have models that predict that we should be at $100,000 this month, or that, it should have gone nothing but up, or they've made moves fully expecting several $100,000 Bitcoin this year. That's going to be fear inducing for those people. Speaking of the model topic, because they're following a model which is can
They're
get
all
you in
predictions
trouble.
in the end. I mean, they're just the model's good until it breaks. It's like until it's not, and we don't. We have to just keep reminding ourselves we don't know what's going to happen. Yeah, we might have an idea. We've got a cycle, a Bitcoin halving, but much beyond that, does it have to copy what happened last time? No. So I'll just quickly whiz through the Ethereum data we always have a quick look at. Obviously, fee burn's been a bit insane. So we're now up at 933,000 ETH. Look at the week. We've got again ETH 8.65 burn rate.
That is insane.
Swap and ETH. So very high, sustained high gas. So there's a couple of other things I've picked up on just other websites, just looking at the same thing, burn fees. You can start to see this from when EIP 1559 kicked in. And we had this relatively calm start, and then we had NFT mania. And then since then, we've been up here. And then obviously now we've got volatility. We're getting some big fee burn. And what that translates into, if you start looking at the net issuance here, is it's been coming down as the volatility goes up. And we can see over here, now we've still got some of November left, but we've had so much fee burn, it's negligible issuance now. I mean, 0.1, I think, net at the moment, it's what percent. So, so we are burning an awful lot of ETH. We could, if we get a very volatile end to November, this could go negative for the first time. So we've had negative weeks. We have negative hours, then negative days, negative weeks. Now waiting to see when we get a negative month. So it's crazy.
Michael's asking, how is network usage looking? Is it growing or flattening or accelerating? Oh.
In terms of Ethereum or in terms of?
Yeah, he's asking about Ethereum network.
Yeah, I mean, ETH layer 2 adoption is still growing. So I haven't got the metrics to hand, but we're seeing user counts exploding. I saw some data on things like MetaMask usage. I think 21 million different users. Insane. Number of active ETH wallets is all-time high, just rocketing upwards. So yeah, I mean, and obviously we're seeing Ethereum used for more and more things. I mean, just the usage of SoRare, the fantasy football site, is insane. So yeah, we're just seeing, and obviously we're just seeing this demand. We're seeing base fee. You can see it live here, 163 all the time. a mix of Uniswap, a lot of automated trading, obviously using block space, but then you've got the roll-ups posting their roll-up data all the time. You know, and NFTs, OpenSea, that's seen a rebound in volume this week. So yeah, I mean, you see priority fee here, 14 Gwei. I mean, that means I'm guessing bots in that block are paying to be at the front of the block. They've obviously got opportunity to make trades, you know, so they're sticking their transactions at the front. So they still just look so bullish and just not priced in.
So Michael made a comment here I want to address real fast. He says, but ETH platform, he says, is the value moving to the upper layers much like the internet? So you're technology guy, let me explain this to non-tech people. So when the internet was first developed, we had a couple of core fundamental protocols that allowed communication between computers. Really, the IP address was the foundation about how to route traffic, kind of like a mail service. And then the TCP, you've heard of TCP/IP. TCP is kind of a mechanism to allow communication between two endpoints, right? And then there were other things built on top of that foundation, HTTP, and then even now there's things that are built even on top of HTTP. And so different layers continue to stack. So, and Michael, to answer your question about is the value going to be pushed to those layers? The difference would be is if the IP would probably be the best analogy. TCP/IP is kind of the best. It's a good analogy for what Ethereum is versus HTTP on top of it. Kind of a layer 2 is a kind of a crude analogy. The difference is if you had to burn IP addresses every time you wanted to do a transaction at the HTTP layer, right? And if you could own those, if you bought a bunch of IP addresses today, so think about the IP address exhaustion we have. If you owned a huge block of IP addresses today, they'd be worth a bunch of money. So kind of a similar concept. Owning Ethereum gives you exposure to the value creation of the upper layers. Unlike the internet, where ISPs kind of got pushed to the side and they don't have as much value as the web scale companies. This is a little bit different model
at the moment with the crazy bandwidth coming off streaming and stuff, and there are lots of arguments about it. So
so they're getting crushed by the people built on top of them. But in Ethereum's case, I think it's a little bit different in that it's more like owning IP space or something and having something of value, because that has to be burned to be able to be used. So in that in that analogy, you have to have an IP address to communicate on, or an IPv6 address, one of the two, to communicate on the internet, right? But if you want to communicate on the classic IPv4 cloud, you have to have an IPv4 address, and those addresses are very valuable. Something similar like that is how you can think of Ethereum, I would say.
Yeah, I mean, the layer 1's becoming settlement layer, and obviously roll up layer, and a lot of automation where there's big transactions, and then all the layer 2s are sprouting out of that. We are now seeing, as I talked about last week, layer 2 from centralized exchanges, and once that's online, you can bridge your funds around. The gas issue is gone, so very significant for almost just for sentiment as much as anything around Ethereum. So obviously wanted to have a little look at this models and halving piece, Brandon. So if we look at the really basic thing, and we all started off looking at the halving tracker last year. If we look at 555 days after the, obviously this is yesterday, halving tweet, we're at 60,000, and if you just do it on days, we're a long way behind the other. You can cross the scale out behind the other halving. So things are significantly slower so far, based on this is going to be on percentage gains per day. So if you look at that, it's saying, yeah, we've got a different cycle to before, and we're taking longer. And obviously a lot of people talk about lengthening cycle. So it's a sort of starting point, say, well, we are behind. 60,000 isn't 179,000. Now, obviously doesn't mean we can't play some catch up, but we're a long way behind there. And then we have a lot of variety of opinions on, this is what I really wanted to look at, is there's so many different opinions out there on what's what. Now, I'm sort of like you, I'm not going to trade off these. What I do like to have with my investing, whatever it is I'm investing in, is some sort of macro picture as to what's happening. It's like the Tesla macro picture of, well, we're going to go to EVs. So who's making all the EVs? Who's got the best EV? Who's got the best roadmap? Who's got the best engineers? There's a macro picture. Okay. So that over time looks like a good investment. And we can see from the halving and the past performance that Bitcoin getting in before the halving was a good investment. Where how we get to exactly to a top, though, for me is just not clear. I don't see anyone as any more right than anybody else when I'm looking at these things, because we just don't know. What the data is showing me is that things are slower right now. You know, we had this, oh, we're racing away here, but then we've just come behind now. The other cycles, we've slowed and we're behind, and we're not. I don't know where we're where we're going from here now. You know, I still think we look bullish, but you know, it potentially indicates we're going to have a longer cycle. If you look at then who's champion of the longer cycle, well, Nick Merton is certainly his base case, you know, and you know, very successful crypto investor and trader and YouTuber. He doesn't think we're going to hit $100,000 this year. His case, when you watch his channel, is that we won't see the end of the bull market until the end of next year. So he's put the same sort of calendar-based almost view of we get to the end of a year, but he thinks it may take another year and everything's just slowed down.
Yeah,
So
I would
analytics.
say if we make it to the end of next year and the end of next year ends up being the peak, then we've lost all correlation to any sort of halving based event.
Or we got a very short correction, haven't we, coming before the next one? You know.
Well, if you think about it, if this drags on long enough, eventually, now we'll get into Mike. I'm sure you got Michael's work here, but eventually, if these type of predictions, so I'm speaking to the end of the next year predictions. If those predictions play out, the lengthening is happening so much that you're almost beginning to price in the next halving. And what I keep saying, and I'm 100% confident this is absolutely what is going to happen. This is not like, this shouldn't be even a debatable topic. I don't know how this is a debatable topic. People debate me on this. What I'm about to say should not be debatable in my opinion. When enough of the market understands the effects of the halving, they will front run the halving by pricing it in, and it will continue. We've tried it. Michael brought it out to me, and I didn't really realize it. Michael thinks that the 2019 stuff was trying to price it in, and that kind of failed. But eventually, the market will understand, and enough participants will understand it, and it will get.
Yeah, it's a bit like forward earnings projection on.
Yeah,
Tesla,
it might not be properly priced in, but it'll get closer the next time, and then closer, and eventually, it's going to happen that the market's going to understand the effects of the halving, and that'll be priced in for multiple halvings out, and it'll no longer be an event. It'll be like a very, might cause some volatility or something right around that time, but it's just like anything else.
Interesting theory. Yeah.
Companies that have dividends, everybody prices in their dividends before the dividend hits. It gets priced into the market.
Yeah, it's forward.
And you have this weird correction potentially, and then some volatility right around dividends. But everybody knows it's coming, and it gets priced into the market. These forward-looking events that are known events, eventually the market figures out how to price them in, and there's some pricing mechanism that's put around that. And so what will probably happen is we'll start to get halvings priced in before the halving, and therefore the effect of any supply shock after the halving, the effects of that will be nullified over time. And that's to me, and that's what's probably going to cause these potentially shorter and less severe bear markets if that were to happen. It still is a market, and you're still going to have ups and downs. Even if, forget the halving cycle or the cyclicality of it, you're going to have, it's an exponential growth asset, and like any other exponential growth asset, as new users on board and as more people understand it, price will appreciate. And as it gets overhyped and as it gets overbought, it'll come back down. It'll be a correction, and we'll continue to have that cyclicality to it, of course. But the halving at some point is going to be understood by the market, and it's going to be less of a factor. It may still be a factor, but it will continue to be less of a factor in successive years.
You've got the factor next year of Ethereum's huge issuance reduction as well, which to me is just going to stress the whole basis of everything in crypto being based on the Bitcoin halving and the Bitcoin cycle. It's going to get a big stress test, and we'll see what happens. And as you say, if you've then got people pricing in, and this is the super cycle sort of argument to some degree, we could see much longer. We could just start seeing a market that isn't all based on halvings, as you say. People price in forward earnings all the time in other asset classes. So you got Ben Cohen, maybe not your favorite person always, Brandon, but he's very popular YouTuber. Was just tweeting about he's always, I think, talks about lengthening cycles.
Yeah, we've called a truce. He blasted me last year. I ended up being right about the market getting off to a hotter start. He did apologize for blasting me, and we had a one-on-one chat. So
yeah,
we've kind of made up. And the nice thing about Ben is he's adaptable. He did admit that he didn't expect what happened, and that he was wrong about that, and that he had to adjust. And so anybody that's willing to admit that they made a mistake and they're willing to adjust, that's all I care about. So yeah, as far as I'm concerned,
I don't know how you can be in trading and not want to adjust, because
he's done a good job of adjusting
chaos at you. So no, I mean, he's just done a big episode with Bankless as well. Is interesting. I haven't caught it all yet, but I'll have a look at it. It's but again, we can see he's saying lengthens from the market cycle bottom. This was yesterday. So again, just looking at, well, we're lengthening in some way. What's going to happen next? So again, it just indicates we've changed. So we can see we've sort of got the halving tracker saying that. Nick Merton, who's a YouTuber, investor, but Ben saying similar things. I know you've got a base case with different models, but also it's lengthening and it could be different point next year. Obviously, Heath put out a tweet on his fib look at what could be the top, but obviously perhaps less with the timing. If we just click this up here, but he's got this projected cycle peak here. It's got 230,000, but it's obviously slightly different. But there's no sort of when on on here at the moment. But interesting that we've got this. This is typical Heath kind of excellent look at things like fib levels and stuff, and just looking at patterns. So thinking we've got this projected peak just off this simple formula. We don't know when it's going to get there. If you go back and look at these other projections, it's going to be slower. Well, if it climbs steadily through next year and gets there.
Out of everybody in kind of our extended community, if somebody gets the actual top tick, like the closest, it's going to be either Heath or Gus. That is my honest opinion. They're one of those two guys is going to get by far the closest to saying, yeah, this is probably the top.
Certainly Heath will almost certainly will know when it's exhausted and it's climbing, and that's a big part of the challenge when it gets so volatile when it's up here, because some of these things look straight up, but it'll be chopping around daily. So just looking for exhaustion. So and then you get these spike down up again, and shakes everybody out. So experience will be a big thing. So it's interesting, again, a very simple projection, but I sort of like the clarity of it, very clean. Obviously Michael's tweet here, lengthening bulls, I sort of see the slope. A nice interesting way of just presenting it. Could we just simply take a bit longer based on this just continuing to lengthen in the same way, which then perhaps squeezes the subsequent phase of the market? And also,
Michael, I like your confidence.
Video on that. Yeah.
Michael's commenting that it's going to be him that gets the closest. I like your confidence, bud.
Those are modesty. So, any of us get anywhere near the top, be happy. Hope it hasn't passed. It's and then obviously we've got with respect to everybody, there's a much more aggressive view here from Alan's look at these different models. Still, again, some good analytics that go into it. But, if you look at this dashboard, you could say ultra aggressive from 2 days ago, that we're very, very close. And obviously that's just assuming we get the blow off top now before the end of the year. So, you can argue this looks unlikely with the price action we've seen. It's very hard to make all-time highs. It's just not looking as bullish. The volume's not great, but we don't know is the the honest answer. There's lots of different formulas here as well on Alan's work.
Yeah, I think Alan, and so I've had Alan on here a couple of times, obviously, and I want to have him on again, but I've been kind of waiting until it's kind of clear that his projections are not going to hit, because I've I hope that there's no way.
You can
But
see there's a lot of people now, because we're getting very close to it. They're like, well, that just looks incredibly unlikely. With the way
I think the biggest problem with Alan's work is trying to pin a date on it. He tried to pin, if it's the end of the year, but once it becomes clear that these targets are not going to be hit by the end of the year, then I think his data will be a lot more beneficial as a general framework without a date attached to it. So the general, like this dashboard would be super useful if we had the dashboard without any sort of like target date. Because I think that's where it's kind of like starting to fall apart here a little bit, is trying to predict the date. But he's got reasons for picking that date too. So I don't like, I'm not going to despair. Like, we would need a catalyst. I mean, he could still be technically right if we had just a couple of very.
I'm trying to work out what that is, Brandon, because we've said it before. And I sort of repeat what I've said. There was a lot of bullishness back in the Michael Saylor buying Bitcoin at the start of this, and Elon buying some Bitcoin, and then obviously not buying some Bitcoin and buying some Bitcoin. But it hasn't continued. Those headlines have not really been there. We haven't seen, there's all these almost like Maxi saying that all of Wall Street was going to be buying Bitcoin, and it just hasn't happened. I haven't seen really any major announcement. It's cool you've got individuals who've said, oh, I've got some Bitcoin, which a lot of people have, but it's not gone the way that it was set up. And of course, the narrative's been adjusted, like all good narratives, but it just, for me, hasn't felt quite like it was projected when I was, watching the news every day earlier in the piece to see what the Bitcoin sort of bull case was. Now, what could a catalyst be? I don't know. Obviously, we've seen China exit. We're seeing more noise about restrictions elsewhere, India, etc., in the news. So that's not particularly bullish. I've said before, and it still feels to me, if this becomes a US-centric plaything, crypto, that's not that bullish, actually. We don't need another US dollar. That's not the point of crypto. So, we need to find ways that crypto is adopted and more people get involved, not less, as a trend. So, I'm not bearish crypto at all. Once it's big on Ethereum, you can't really be, because there's so much happening. But there's a little bit in the macro piece that just says it's not quite where it needs to be right now, to me, and we
would need some really unexpected. Like, they would be highly there was a lot of hope around, because Saylor did his conference, about 6 months ago. People thought, okay, this last quarterly earnings, people might report they added Bitcoin to the balance sheet. That obviously didn't materialize. I kind of said that I didn't think it would even be this quarter anyway, even if they have, that they would wait to the full year report, because they have a lot of accounting things to keep track of. And so they're not going to necessarily put that fully on their books until the complete year.
I think for me, Brandon, is looking at the corporate world a little bit, also have come out of that world. There's also priorities at the moment for companies. Now, are there that many companies with all this cash sloshing around that they don't know what to do with, they can't get a return on? A lot of companies are bailing water at the moment. It's not a great place to be trading. There's exceptions. If you're Pfizer and you're making £1,000 a second or whatever, it's different. But there's a lot of companies, you're not making that money. So it's, I don't know. I just don't, there's all this about Tesla needing Bitcoin. I saw the narrative, which I just didn't agree with at all. And we're seeing the Tesla business is a cash machine, not Bitcoin. So, and a lot of businesses, you work for big corporates, you have ways you make money in these companies, and they have return on investment measures. They have cash to cash measures, lots of them, and their financial models. You're really talking about, have we got a load of cash we don't know what to do with, which is almost what Michael Saylor's case was. I remember when I first watched it, I thought, that's a bit weird. There's a guy running a company has he got so stale in his company, he doesn't know what to do with his cash. That's odd. Not everyone's Apple. You've got cash piled up to the ceiling. Although I'm sure if Steve Jobs was around, Apple would know what to do with their cash at the moment. So that's just my, I'm trustful saying quite negative. I don't really want to be, but I'm just not seeing the catalyst right now. There may be one still, but the model's been, well, we're printing loads of money, so it'll just go rocketing up. Well, yeah, if you'd leveraged long with a lot of leverage on the Nasdaq in March last year, you'd be doing pretty well on that model. Yeah, so, which I know some traders have. Some of the people I follow occasionally, absolutely have been on those indexes, and yeah. So, I mean, I don't know what you see. I mean, I'm interested. I'm talking around this model. I obviously just picked these ones out today.
As far as as far as the different models, I think this is I'm gonna throw some opinions out here. I like what Heath came up with for the top price. I like Michael's dates. Michael and I don't necessarily agree on the top end price. And it's not that I think it's impossible. I think it's improbable. And as a trader and investor, I'm going to set myself up to where I'm going to be very excited to see much lower numbers and just be elated to see even higher numbers. But nonetheless, it's a psychological mental game. But I just don't see the high end numbers hitting. But as like Alan's model, Alan Au, he's got a lot of really good data points. And so I look more at the data points and to see what those data points are saying than his conclusions, because the conclusions, I can tell you right now, what I see Alan does is he goes and does a lot of research, and he finds the data points that line up with a specific thesis, either that can show a date or that can show a specific price. And I can take that same data
discussion and come up with a lot. The CTM sort of has been around wave 1s and wave 2s now, and then we've got sub waves coming, like wave 6 and 7 and whatever, just trying to replicate the previous model. Yeah. For me, I'm not sure, Brandon, that we are going to replicate.
No, we're not. When the rolling top started, before it even rolled over, I said that this model is going to be a lot different because we were just off to such a hotter start. At the time, we were all thinking maybe it's because the Fed printing and this asset inflation, this is just going to keep driving this thing that much higher. But when it started to roll over, it became clear to me that this was a unique. This whole cycle was going to have a completely unique identity. Just like 2013 looked different than 2017, and there were different participants, different drivers, speculation was rampant, it was a very different set of circumstances, and it continues to be the case. And so it's my, this is going to be a unique cycle. And the thing too is the cycles, in my view, are going to start to fade anyway. So I don't think this is the last cycle per se, because I do think the next halving hasn't. Obviously, this last halving event hasn't been properly priced in yet, I don't think. No. But the next one still needs to be priced in.
Question here: Pi cycle. There's obviously
Michael's. Yeah. So Michael's newest paper. I don't know if you want to pull that up. Michael's newest paper. He does a lot of work around lining up the Pi cycle top to his potential block.
I saw some things about potential different prices and things on Twitter when I was reading through it. Yeah, and how to line all the different things at Pi cycle and how long it could take and what it means. I mean, are we still? What's your view on Pi cycle? Because obviously it did call this interim top very nicely. Actually, it got a bit poo-pooed, I remember, in the Discord and CTM at the time, but it actually called that really well. If you'd got out there, you'd have been
I'll tell you the reason I ignored it is because so many of my fundamental metrics were broken already. It's like my separation from the SMAs and all kinds of other stuff. Like for this part of the quote unquote cycle, everything was broken. So I thought I thought maybe the Pi cycle was, because it's based on moving averages, was also going to be broken because of the money printing. And so I kept trying to adjust it. I actually at the time I adjusted. I did a live stream or a video. I don't know which one. But if you recall, I don't know if anybody here recalls what video that was. It's a long time ago. I put the Pi cycle on top of a Bitcoin over the M2 money supply, and it was nowhere near crossing. And so that's why I kept saying, see, I think the Pi cycle is going to be broken because of the money supply. And so my problem with the Pi cycle did cross. I think a lot of big players caught that signal and went ahead and started to sell. And then we had the China, kind of black swan event right after that.
We had the mining exit and all those things. It just, obviously, we're a long way from
we're a long way from crossing
close
again.
together
Exactly.
there,
So either
so-
we're starting a new cycle,
Yeah.
but we've made a new all-time high. So something, either it's broken now, or it's going to call the next one. I don't know. I have no idea. All I know is that
If we get this
when
blow off top, obviously the one thing you can say is this catches up very quickly. So we
yeah, in a blow off top,
up
yeah, if it
here.
were to go to like $1 million in the next month, it would cross, right? But it'd have to go. That's the other thing too. A really good point there is just on this topic. Michael's paper that he just put out, Julian did a breakdown of if you're going to get a pi cycle cross, what the price of Bitcoin would have to be by a
That's what I
certain
was
date.
looking at. Yeah,
You'd have to be like several, like a million plus. Let me look at the paper.
$1 million in like December or something.
Yeah, it had to be some insane number in December to hit that pi cycle cross. I'm not going to be, in my opinion, I did well enough with my own strategy using my SMAs, and I've dialed that in more, that I don't need to worry about the pi cycle cross. I will consult it, and it'll be very interesting if I'm seeing with my refined strategy, if I'm seeing signals that I need to be exiting right around the time that the pi cycle is crossing, it's just going to give me more confidence. The pi cycle cross happened right before I would have got my exit signal, right? Based on my modified, how to deal with breakout system. So I would have been 2 days behind the pi cycle and about $1,000. So I would have been out roughly right behind the pi cycle anyway for leverage. Now I give spot a lot more room, right? I don't like, I won't even sell, I'm not trying to time the very top of spot. I'm trying to time the very top of trades. And then everything else I will, DCA back out just like I DCA'd back in on the pops, right? If I know we're rolling over like that pop, the lower high that we put in, that's where I'd start to DCA out some spot this time. So for me, I'm not too concerned about, exactly what the pi cycle does because I'm already using moving averages to inform my trading decisions. And so I'm pretty confident that I'm going to be pretty close. And again, if the pi cycle crosses and it's near my signals, it's going to give me that much more confidence is all I'm going to see it as. Let's see here. Where's Michael's post on his last one? Michael, did you pin that one you just posted last night? Let's see here. Block based. It's called the Pi block. Something is what he called it. I'm trying to find it.
Yeah, I'm going to look through Michael's.
Because he's got the updated. I think he's got an updated. Michael, you need to pin that sucker. Pi block. I think I found it. I found it. X marks the spot. Let me share my screen here how fast I got it. I'm going to share Michael's work real fast. I do think, again, his model has by far the most chance of getting a few key elements right. Now, on the pi cycle cross thing, let's go find Julian's work here, the dates. Yeah, so if we got a pi cycle cross in, was it December 15th? December 1st, 1.2 million, December 15th, 1 million. So we could get a pi cycle cross on December 31st at $900,000 basically. And we all know that's not going to happen, right? So clearly we're not getting a pi cycle cross this year. That's just clear as day. So we push this thing out a little bit further. I think by blocks, Michael's got a potential top somewhere between March and April, which would put us in that $300,000 to $400,000 range for a pi cycle cross. So we push that out and it starts to go back up. Yeah, that's the other thing too, is that the peak for a pi cycle cross kind of flattens out right there in that after April, and then it would start to go back up depending on how price did between now and then. But if price stays suppressed, this is also kind of considering a more or less consistent increase in price, I believe. If price were to stay depressed for a long time, this will keep getting pushed out, right? So that's the other thing to keep in mind. Yeah, so we're looking at block 96,000 from halving to block 100,000 from halving, as Michael thinks the peak would come, which would be between the early part of March and the early part of April. So going back to Julian's work, if we did, based on blocks, get a cross right when he's thinking the early part of March, that would give us, a pi cycle cross. Michael breaks it out exactly in here, a couple $100,000. What I'm curious to see is what could change all this is if we get a big move into the end of December. So my expectation is actually that we kind of fake out the market all kinds of directions. This right now feels like reaccumulation. Let me just share this with you guys. Like, I'm looking for that bounce right now. Here we go. Here it comes in right now. And we did get a hit of it earlier. I'm looking for a bounce directly off that green line right there. So we need to hit that and bounce. And we're doing it at this very second in time on a 12-minute chart. But my opinion is that currently we're in a reaccumulation. I would imagine the chart is going to look something like this. It's just a guess, please don't take this as some sort of prediction. So then I think this is all kind of stretched out. It's probably wouldn't take this long, but we'll get a bounce here at some point, a move, some kind of maybe we stay above this level, maybe we go below it. I'm not 100% sure. And then a spring back out of here. But I do think that kind of come mid-December, that the fundamentals, everything's set up for another kind of bigger moves. This could be a reaccumulation phase. And then the December time frame, if I were to drag this over, I'm going to show y'all kind of my mind's at right now. So I think we're kind of in a reaccumulation about like this right here. This is similar to this. Then I think what happens next, this is just all guesses, but I think we probably get some pretty good price action into a rolling top next year. So if you take this and superpose it after you get that eventual breakout, right? So you get this little, like, this is that LPS and a Wyckoff pattern. And then you get this potential top. Now let's stretch this. Let's just bring this in just a little bit. This first top, I'm saying this first top happens like very late December, potentially. The reason I think that is everybody's looking for that December end of the year top. But if it's a much lower number, like $80-something thousand, like this might be, or who knows, I don't know. But we get something that looks about like this price action, where this is December. Everybody thinks this is the top, and it's only like $80-something thousand. It comes back down, and then in January, when everybody's out, we resume up and we get another, kind of. But this is a much lower price target than potential. I don't know. That's my best guess as to what's going on here. And the reason I say that, the big reason I say that, is there's a ton of evidence pointing to this area right here. I had it on log chart that might have modified it. This area right here being a reaccumulation pattern, right? This looks like and feels like, based on volume profile. Let me show you all kind of the volume here. The reason I say it feels like accumulation is the sustained downside. But if I go out, I'm gonna go to the 30-day chart and I'm looking at the hourly. Look at this volume increase we've had. So this whole volume increase has been right here as we're hitting this area right here, has been an increase in volume. And that's buy volume. As it keeps bouncing, all those big wicks, it keeps bouncing. So I think this increase in volume is telling us that this is more or less engineered to feel like downside pressure to cause people to sell, and there's a lot of buying coming into that. So did we actually get a hit? I'm just seeing this was back in, so this is our October low. That's kind of a key area I was looking for as well. So we broke below this. So I'm just keeping an eye on it now closely here, see what happens here.
Yeah,
but
and it has a habit of taking out the prior lows. And it
does.
down.
It does.
Just see if it just literally spikes and takes the liquidity, and then it'll be back. But
what gives me pause is there are a lot of.
You can see it's really testing the buy support here. So,
yeah, you see this. This is there's some nuanced differences to keep in mind, and so there's a lot of nuanced differences. Check this out. So notice the price action of the 50 days we sliced through here. The 50-day held a support. You kind of had this, and then you had a breakdown of this kind of pattern here. Now we're breaking out of the downside of that. Now let me go back to, everybody's comparing it to this. I do think this distribution pattern, another real big reason I think this distribution pattern, that we're in an accumulation pattern, not distribution pattern. What happens with distribution patterns is you get a sharp sell-off and a sharp bounce. And those sharp bounces, this creates a lot of buying. See how much time we spent up here and how little time we spent down here? This creates a lot of buying FOMO and exit liquidity to sell into, right? And so this is engineered to create sell liquidity. So this sharp bounce, you see it hit the 50 and bounce right off of there, and then it consolidated underneath over here. This creates exit liquidity to sell into. And then you get another bounce. This creates a lot of exit liquidity to sell into. And then the snap happened over here. But it kept bouncing, and this also created a lot of sell liquidity. People thinking it's going to make another high. And all these events, these quick recoveries create a lot of, you spend a lot more time up in these areas engineering sell side liquidity. You don't spend a lot of time down here. Now you go and you look at an accumulation. September, what you see is you see weak bounces and a lot of time in these accumulation zones. So you see these FOMO, these kind of FOMO inducing sell, and then you have this panic, right? You create this extended low range, a little bit of relief, belief that it's going to buy, and then boom. And this is met with buying at support. We spend a lot of time at support. So this is typical of reaccumulation, where you have a lot of downside pressure. This creates a lot of fear. You kind of see this pattern here, where you look like you're holding like a key moving average. You break to the downside and you snap back up. And this one made it all the way down to the 120, right? So after we made our little bounce here, so this is exactly what I'm looking for. This extended downside pressure to create fear, a little bit of a pop back up, and then a worse cascade down to create more fear, more buying, and then the reaccumulation is done, and then you can exit out of there. That's what it feels. What we're in right now feels more like this and less like this to me. That's just my opinion. So I do, for those reasons, I do think we actually have potentially more upside left in us here. But of course, we have to just follow the technicals. And so again, my worst case is these levels down here, and it would not shock me at all.
If you're on the weekly here, we're painting a pretty nasty candle at the moment. That's where it looks like it. So it's going to take out a lot of weeks if it doesn't find a way back up here. And then
check this out. Check out September. There's September. Look at all that stuff it took out, and then look at what it did right after. So it's big. All of this ever since above here, this has just so many fingerprints of manipulation all over it that, for me, kind of my base, if I were to say a base case, my base case is that this is engineered manipulation. And I just really think it's going to continue. And I'm going to play the game until it no longer continues.
Yeah. No, I think we've talked about it in the previous weeks. I mean, when you go and look at that Wyckoff pattern, it's a very long, complicated pattern, and the chart is almost perfect against it, which is almost like there's an algorithm running the price of Bitcoin, which is like a sort of insanity. So there's your bounce at the moment. It's coming off that
exact low right there. It'll take it out. So this apparently, we don't know what kind of pattern we're in, but what we're probably going to do is take this low out and then bounce, and then you might get a weak bounce at 61,000. I don't know, and then another. But this is very typical of reaccumulation patterns. You spend a lot more time down here creating fear and having people capitulate and sell into. I
remember the 12 to 10 at the start of the bull market when Bitcoin came down, and it was hammering away for 2 weeks at 10,000, going to 9.8 and 9.7, and then back to 10. I was quite new looking at it then, thinking, oh, this is ugly. It's like going to go down, but it held in the end and just created a floor, and then it sort of took off.
Yeah, you see, look at all this volume. Look at all this volume we've got.
Suddenly we got some volume.
And it's a little bitty sell-off and monster volume. This is not a huge sell-off. Like, this is not like this over here. This is a big volume event.
It's interesting, isn't it? Because this is what we've been looking for. We talked about it last week. Where's the volume?
Yep.
Suddenly and now the volume's back.
The volume is back on these sell-offs. So this is a key, and there's a lot of buying on Bitfinex right now. This is, to me, again, more indication of engineered price action. Like, this is creating fear, and this is really working against all these people with their models and their assumptions that price is going to do a certain thing.
Wall Street turned up in their cycle, and we're getting engineered price action. Who would have thought? And this is in 2021, when every Tom, Dick, and Harry's using algorithmic trading. There's AI now running on all this stuff. And I mean, but it's going to copy what happened last time when it was like retail and a whole load of chaos. This is what I've always. I'm not sort of disregarding anybody's view, because in the end we're probably all wrong with the way the market does things. But it just you get a feel. You look at the price action, you think, well, when we saw the 56%, I was looking at that thinking, well, that wasn't what we were expecting. However much you dress it up, it was a massive capitulation crash. Some things came down 80%. sort of mid-cycle. It's like, well, that wasn't what we were expecting to see. And then you see the Wyckoff pattern, then you start to watch the price action and you start to think a lot of this, you can see it into weekly closes and daily closes. The manipulation in the last hour is as clear as day. Somebody's just set a level on a computer and moves the price, and the price moves there. And it's doing it constantly. I watched the weekly close this week, and if you go look at up to the weekly close, the price just pumped just before the weekly close. It was like, well, okay, did everyone decide to buy just before the weekly close? I wouldn't have thought so. So it's hard to say it's all manipulation, but it doesn't surprise me in a way. It's like you read the things on what the likes of Google and Facebook do with data and all the analytics and all the models and all the they know more about you than you. There's a lot of money to be made here. That same sort of AI is running against these markets. It absolutely is. There's money to be made.
People are asking who's the one doing the manipulation or whatever. I don't know. I mean, nobody
knows.
Nobody knows. It doesn't matter. It just doesn't matter. When you see, like, again, I have a trading system, and all I'm doing. Let me be clear about my intentions and about what I'm kind of talking about. I can expand this. Sorry, I'm looking at the screen now. My preview over here is a little bit too small. Here's how I look at all this. I look at this and I go, okay, this is clear manipulation. I'm going to study Wyckoff patterns, and I'm going to study, what the psychological and why this might be engineered and what it does to the psychology of people. And all I'm going to do is dial in my trading strategy to account for these patterns, right? And find ways to more accurately navigate these patterns. And so that's what I've done, right? I've taken the lessons I've learned about what these patterns could mean, how to look for the different patterns, the volume profiles, and all that type of stuff. And all it does is it informs it helps me dial in my own trading system to where I know what to do. So at certain points, I will.
You need an instinct to come in after a while that you know what to do at this point. Yeah, because I've seen this already. Yeah,
and it's a lot of it's instinct, but a lot of it's like things like just knowing that, okay, this is probably a reaccumulation pattern, but it could be a distribution pattern. So because I think the probability is about 70% that this is a reaccumulation versus 30% that this is a distribution pattern, what I'm going to do is I'm going to place my trades accordingly. I'm going to be slightly more aggressive with buying into support. I'm going to be a little bit more loose with my stop losses because I think the odds are that we do bounce out of here, right? And so I'm going to play that, but I'm also going to know clearly where I'm wrong, and I'm willing to take a little bit bigger loss because I think the odds are higher that this is reaccumulation or distribution. As soon as I get clear indication that this is distribution, then I will take reactive measures to the other extreme. So basically, if it were to flip around and say, okay, something changed with the way. So maybe if we make a third peak here, for example, a real clear indicator to me this would be a distribution pattern is if we go ahead and we make this higher high over here,
make another one just like the previous pattern,
and we see low volume on the impulses up, but high volume and a little bit of downside, right? If we come back to test this level, and this is a higher volume move than this move, I'm going to know right then and there this is 90% likely to be a distribution pattern and very unlikely to have a continuation out of this. But so I'm going to place my stop loss very aggressively, probably under like this high over here, right? And I'll just simply be stopped out a lot closer than I would have if I thought this was like an LPS pattern, and then it looks like it's going to resume out of here. An LPS pattern, what that is a lot of volume on the buying side, and then weak volume is bounce down, and then more volume out.
Whilst I'm here, obviously, if you're a little bit more of an investor and a bit less of an active trader, obviously is applying some of this to look at when to accumulate. When you maybe you if you like, I'm working with my pension, and I've got Tesla position. I've got about 15% of that position which I would trade, but I've traded like twice. It's not trading like you would down on the 4-hour or 8-hour. It's just looking for these key things. So when prices push right up into a key level, and it's just at 1230 the other day, it did a similar thing. It made a high, it then pushed up, could not get back to that high, and then bang we came. You know, so there are times when you can simply do some simple things as an investor, just to do things on a higher time frame. Now, probably for another day, it might be worth a thought as to what would we do zoomed out a little bit. How would we handle this market more than if we're on the 8 hour or the 4 hour? Because I think for a lot of people here, it's not just about the trading. It's you've got your spring, you know, on the 1 minute. It's certainly found support nicely down there. So
that's the volume profile too. So
we should have put a trade on there, Brandon. We'd have been done there. We Heath style just doubled my whole stack.
Yeah, no, this is why that's what I've been doing. I've been doing Heath style buy into support. So I buy into support a lot more than I wait for the resumption too. So what I do now is I layer in like these longer term trades. So like when I'm, especially with Bitcoin, my leverage positions are actually really, really small entries. Each one is pretty small, but I'll nibble, I'll nibble here. I didn't have an order in before we went live here. I should have right there. I should have nibbled, but whatever. On a resumption signal out of here. So I have got a little bit on right now, right? A resumption signal out of here. If we break this level, at this point, I don't know that I'll nibble, because what I'm expecting, again, kind of my go back to the whole base case thing. My base case is we hit this 20-day SMA and find it as resistance and roll back over. So I'm planning to, once I get indications that we're rolling over at the 20-day for another lower test, then I'll be trimming my leverage positions and moving stop loss aggressively up under here in profit, right? And then that's how I'll play that. But
I think it's great. I mean, to see more detail of your system, so you cover that on a lot of your streams. I think what's interesting for me is if I'm zoomed right out on, say, Ethereum at the moment, some people were taking off, and I could have taken some off 4,800. I could see the resistance line there. It's one of those things for me. If you zoom right out, I just want to be in the market right now, because if this explodes, I don't sit in front of the computer all day. Things to do. I don't have time to put a trade on. It could be gone out of here at some point. I think ETH going to send at some point, and I just don't know when. That's the
my ETH chart's really, really simple, right? So this is your first drive up. This is your first retest right into the 50. Perfect. So yeah, I would have, if I was actively trading ETH like I am Bitcoin, I would have trimmed a little bit here as we rolled over right here. You see that peak right there when you lost that after you rolled over, and you tested it as resistance, trim some. And then, when you lose the 20-day, that's a big loss on the 20-day right there. You didn't really get a chance to trim on the daily close below that, but you buy back here on the 50 at the bottom of that trend line. But you have some weekly support. Like I would, you got a really good confluence of support here on ETH. You got this midpoint trend line. So this is not to me, this is not the bottom trend line. It's obviously down here more, but you've got a midpoint trend line, 50-day SMA, and a weekly support all in this little area here. So odds are you get a bounce from here. Now the question is, again, in my trading system would be, I'm gonna place orders all through here to accumulate, looking for the bounce. The odds are you bounce at least to the 50% retrace of this sell-off, whatever this sell-off ends up being. In trading, probably 80% of the time you make it back to the 50, the 0.5 fib level of a large sell-off. You retrace it typically about 50, unless there's like really bad news that's really pile driving something down. But in a normal market condition, you'll bounce right back here. So that would be my initial take profit target. I'd take a little bit off, and I would watch. I'd move my stop losses into to either break even or slight profit. And I would watch for this to see if it rolled over or if it consolidated below and we're going to break through to the upside. And then you put your position back on if you get a clear resumption signal, right? You add back whatever you sold. That's how I trade it. Like, it's pretty simple. But yeah, I think ETH, the odds of ETH bouncing here and going back to the top of the channel are probably 60 to 65% versus making its way back down to these lower support levels down here, which would get you the 120, the weekly over here, and this trend line down here, the 21-week EMA, and the 21-week EMA and the 120 are almost always next to each other. So yeah, I would say the odds, 65% that you're going to go back up here versus 35% that you're going to come down here. That's how I play it. Like I assign more or less a probability to it, and then I adjust my trades, my trade size, the aggressiveness of my entries, and my stop loss according to the probabilities I think that a certain trade idea is going to work out. So anyway,
fascinating. So we've gone on a bit. So
yeah, I'm gonna wrap up. And we probably need to wrap up. It's getting late for you. It's way over time probably, I think. So sorry, I just now realize how late it's getting.
I'm still
All right,
awake.
guys.
So,
Do you have anything else, Alan? Do you want to wrap up with and add before we wrap up?
no, I mean it's all good, Brandon. Fascinating
Right.
as ever, and we'll be hopefully back. Won't be next week, but we'll see where we are the week after. So
Yeah, the week after, and I'll try to have Michael on too for everybody. All right, everybody, take care. Thanks everybody for the comments. Sorry we didn't get to the last couple of comments here, but we'll be back with you. No live streams next week. I'm sorry. I'll try to put out a couple of just quick 10-minute updates, and then look for maybe Michael the week after and Alan as well. So all right, everybody, take care though.